This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 163 is brought to us by ByBit, in particular the ByBit card. I've been seeing this all over Twitter in the past year, and I just got this offer via Telegram. So anybody who is in a country that qualifies, you do not have to be an existing user. This is for new and existing users. I don't even think you have to really trade through ByBit to get this, but it is the ByBit card. There are too many advantages for me to mention in a 1-minute ad read, but what you get if you click my link, I'm going to put this link in two places, one in the blog, two directly in the show notes, is a $25 bonus on top of all the benefits ByBit already gives you. You know they're going to give you that with the card too, because as everybody knows here with ByBit membership, no matter where it is, has its rewards. It is the 10-Minute Contrarian Podcast, and I tell you what, we have been absolutely lightning at hitting these dips, and we're not doing anything really special. It's just really obvious stuff. But anytime there's been a dip in the market, an irrational dip in the market, we have called it here on the show or on Twitter. And if you bought when I mentioned it, you have been very happy. And these buyable, irrational dips just keep happening. Not even 2 months ago, I came out with a podcast that talked about the dip we had in crypto. Told everybody, hey, if you got some buy orders, if you've written them down especially, take a look. We might be getting there. And I also said I put a trailing buy on IMX. And I got myself some more IMX for cheap. And even though I want to stack dollars as much as I can, if you're going to keep giving me these things, I have to take them. And then just hope over time I have plenty of opportunities to stack more dollars. And I think I'm going to. I'm being a baby about this dollar stacking thing. I just need to understand that there's probably going to be ample opportunity to stack. And even though that's the main thing I want to do, you have to get it while the getting's good. Now, why historically, at least, have we always nailed these dips? Well, it's for a few reasons. One, and these are things you've already heard before if you've listened to the show for any amount of time. But first and foremost, we take a long-term approach. I don't think your average person understands what a superpower this is. I've said it before, if you're going to trade. There are clear advantages to that. If you're going to hold long-term. There are very clear advantages to that. Now, the only thing you don't want to do is get stuck in that mushy middle. And there are so many people stuck there, and it is nothing but to our benefit. We're just sitting back and doing what rich people do. Call us crazy. Call us early. So, you take that long-term approach, and, it's a saying as old as time. All you got to do is take something that's bullish or that you're bullish on, and then buy the dips. And I've always said, especially in trading, that's easier said than done. And this can certainly be achieved with technical analysis. But if there's going to be a bunch of dips in between now and when we really start to cash out, then which dips do you buy? We don't have unlimited funds to where we can just buy every single one. With trading, we can, because we're in and out. But as investing, it's not that easy. So what do we do here on the 10-Minute Contrarian Podcast? Well, we wait for these drops. And then we ask ourselves, was this drop or the magnitude of this drop justified? Or was it irrational and ridiculous? And were the reasons that we saw this drop legitimate things that could affect us long term? Or were they just, things that affect the mushy middle? Because it's almost always option B. Now, if it's option A, something like the FTX crash or Terra Luna or something like that, well, yeah, then you wait. But if it's not, then the market will soon figure this out. And, if it's something you're bullish on, and we are all bullish on the things we like here at the channel, Contrarian Investing, which includes energy, which includes crypto, then we want to get in and take advantage of this while these things are on sale. And often at times at a deep discount. Deep discounts that should not exist. Now, again, don't just blindly do this. I told you guys, have the things you like and have the levels recorded somewhere, these levels at where you want to buy. And then what I do is once it reaches them, I put a trailing buy on it, understanding that I'm not going to get the most optimal price by doing it this way, but if I'm wrong and it does go down further, my order can also follow it down, which just gives me a cheaper and cheaper price all the way. This way, I'm either getting a great price or a really, really great price. So when you combine a long-term investment outlook with the ability to determine if these drops are rational or irrational, combined with our trailing buy strategy, there's really nobody else out there doing this, at least not with this combination of things. So, where are the two biggest, most irrational drops I'm seeing in the market today? So one of them is going to be in uranium and uranium mining stocks. Now, we know, as uranium investors, we've pretty much accepted the fact that we don't know when this thing is really going to take off. Literally everything is bullish in our favor. We know uranium and nuclear energy is the most clean, efficient, and, believe it or not, safe energy out there. And we know about all the nuclear reactors being built. We know about the small reactor technology going on. And we know this is a very tiny market that is not cranking out the supply it should. I've had people tell me, well, we already have a lot of uranium above ground right now. Okay, one, that's debatable. Two, even if you're right, what happens when that supply is gone? Spoiler alert, it's not good. There are so few bear cases, and if any bear cases creep up, again, they're usually very temporary. They don't affect us long term. And uranium stocks have really taken a hit these last couple weeks. Like a big one, like, whoa, what is happening to my uranium positions? Now, why is this? There's not really much of a reason. I've looked everywhere. The spot price is holding pretty firm. Now, there is an overlying macro event that happened this past week. We'll talk about that when we get to the next section. But for me, at least, and this is not financial advice, don't do anything I say, but for me, uranium is back in play. And I'll explain how I'm playing it later on in the show. So uranium is one place I'm looking, and the other place I'm looking is crypto. And this is the easiest place to look because when things drop, they drop hard. And normally not for legitimate reasons, normally because it's a volatile market and because so many people, so many traders and institutions too, have certain price levels or a moving average or an algorithm that gets triggered to the downside. And this makes prices fall way lower than they're supposed to. Now, mushy middle people hate this. Long-term investors absolutely love this. So let's look at the reasons. Are the reasons why the market is dropping right now really important in the long term, or are these just silly temporary things? Last time we did an episode on this, we were able to identify what these factors were and then also recognize that they were only temporary things. Germany selling off their Bitcoin because Germany is broke is not a long-term factor at all. Yet the market was treating it like it was. So now this time around, what do we have? Well, we have the one big macro event, and so far with the correlation that we're still seeing to the market, if the market drops, crypto is probably going to drop further. Chairman Powell came out and said we are not dropping rates in July, which is not a surprise. I don't care what kind of odds they put on it, they're always wrong. Take the under every time. But the market was surprised by this, and then things dropped. Bitcoin dropped, and the rest of the market dropped with it. Because we've all been told that as soon as rates do start to drop, we're going to see this slingshot effect in things like gold and Bitcoin. Okay, I don't disbelieve it, but I'll believe it when I see it. But because this is going to be delayed by a few months now, we had pretty strong cryptos drop as much as 20%, if not more in some cases. All because the mushy middle guys got all pissy about it. And then on top of that, we've had pretty much a minor version of what we saw back when the Bitcoin ETFs were approved and came to market. Grayscale had to sell a bunch of Bitcoin off. We knew this was going to happen. Well, we knew it was going to have to happen. But yet it still made the market go down. And we were talking about it back when it happened. And we were like, guys, this is just what is supposed to happen. This is not a bear case for Bitcoin, for Christ's sakes. Take the gift. And what happened as a result of all that? It made the price of Bitcoin drop under 40,000. And would you believe, as soon as Grayscale stopped selling, the price of Bitcoin rose all the way to 73,000. And this is what's going on in Ethereum right now. The Grayscale Ethereum Trust, ticker symbol ETHE, has been getting rid of the Ethereum in that fund so they can switch it over. And so on top of what's going on with rates in the United States, you have this going on at the same time, which is doing nothing but giving us bigger and better discounts in the altcoin market. So again, I don't really want to buy things, but man, if you're going to give me a drop of this magnitude over things like this, which have zero long-term ramifications on the market, like literally zero, I have to buy. It's all part of being disciplined. Discipline is not just disciplining yourself on the sell side. Discipline is also making sure you don't pass on opportunities if you feel like they exist, despite what you actually want to do at your core. So now that I've explained why I'm buying, let's go ahead and move over to what I'm buying, if anybody cares. So I'll say this, you're not going to hear anything new in terms of positions this episode. I am more interested in adding on to what I already have as opposed to what I haven't bought yet, which makes a lot of sense. I like the positions I have better than the positions I don't have yet because I actually believe in them. And I'm putting my money where my mouth is and buying more of them. So on the uranium side, you guys are aware of one of the positions that I hold. That's going to be Energy Fuels, ticker symbol UUUU. I am putting a trailing buy on that. And I'm putting a trailing buy on one other position that is, I don't know if it's the same size as Energy Fuels, but it's in that category. When it comes to uranium, I personally kind of like to play in the middle of the pack. But if you are an ETF investor in this space, I think you're doing it right too. There's been some drama with Cameco and with Kazatomprom, which is probably affecting things in the short to mid term as far as those ETFs go. But I think overall you're going to be pretty happy. So that's really all I have to say to that effect. Let's go ahead and move over to crypto. And my thoughts on what really is going to be the future has not changed much. We have to ask ourselves a really big question here when it comes to altcoins and just the blockchain overall. What is going to be used? What are the things that are going to be used in people's everyday lives that will be powered by the blockchain? And which companies are going to benefit from that? And this isn't just on the consumer side. This is on the business and institution side too. What will they be using? What might they already be using? And like we mentioned a while back, what partnerships have already formed to maybe not guarantee, but put a really high probability that these companies are going to be using blockchain technology in the future, and which blockchains are they going to be, and which products are they going to be? Because I'm telling you right now, as we sit here, there's not much. Blockchain does not affect most people's everyday life. Blockchain does not affect most businesses' day-to-day business life. But it's still just a testament to how early we are, because we know it's coming. And we can take solace in the fact that it's already being used. There are things out there in the crypto world that are being used a lot by people. Can anybody name the number one thing that exists on the blockchain right now that maybe almost 1 billion people are using? If you don't know, it's going to be really obvious when I tell you what it is. It's stablecoins. This is a product created by the blockchain that is having a major impact in the lives of a lot of people. Now, beyond this, currently, you still don't really have much. I would say probably at this point, the one product powered by the blockchain that we're seeing the most of, especially now, is something called Polymarket, which allows you to see and I think bet on outcomes of just about anything, but especially now presidential elections and things like that. And yes, this is on the Polygon blockchain, and yes, Polygon's Matic token is stupidly on sale, in my opinion, at under 45 cents as I'm talking to you right now. And the last time we talked about Matic, we explained why. It's just not at the top of any narratives. But we don't care about that. As real long-term investors, we want to know exactly what we just talked about 2 minutes ago. What is going to be used by people, by businesses, by institutions? And Polygon is the current leader in this space. And even though it's just one thing, it's one of the few things on the blockchain that is being used quite often right now. Polymarket is. And so that gives Polygon good momentum moving forward because future companies see things like this and it kind of gives it that social proof. It's like, oh, well, this company's using Polygon. It must be for a reason. Let's go check it out. And there's some other very compelling layer 2s out there, but I feel like I got the best of breed here. And even though currently it may be unexciting compared to some of the other ones, I care so much more about what is going to be really used in the future. And so many arrows are pointing towards the Polygon blockchain. And I'm so glad most of the market right now is not seeing it that way. So putting a trailing buy on the Matic token today. Now we also have the AVAX token at around 22.5. This is way too low for the AVAX token. We said before, what is going to be used by people in everyday life? Well, I think on a really large scale, and you know my thoughts on this, it's going to be Web3 gaming. I think it is coming whether you like it or not. And if you want to talk about something that is going to be used by a lot of people that is powered by blockchain technology, it is going to be Web3 gaming. So no matter what you think about it, as an investor, as a serious investor in this space, I don't think this is something you can ignore. And we already know the Avalanche blockchain is going to play a big part here. But it's not just used in Web3 gaming, it's being used in so many things. Just this week, I heard that the entire California Department of Motor Vehicles is moving everything to the Avalanche blockchain to make things, easier and less ridiculous, as we all know DMVs can be. That's a lot of people and a lot of data moving over to not just the blockchain, but the AVAX blockchain. And I think it is just downright silly that you're going to give something like this to me at prices like this. So I'm putting a trailing buy on AVAX as well. Now, this next one has always been a bit speculative. We did buy very cheaply. We have taken a bit of profit when the price went up by 4x. But I think at the prices where it currently sits, I'm still really liking Arweave. Now, so if you don't know, Arweave is blockchain storage. Almost every product out there on the blockchain, I think about anywhere from 90 to 95% of them use Amazon Web Services or some Microsoft product for their storage. So as decentralized as a blockchain is supposed to be, does that really sit well with you? It wouldn't sit well with me. So things like Filecoin and Arweave are responses to this. As it sits right now, the one bear case I can see, at least short term, is they need to get their prices more competitive. But if you believe this is possible in the coming months, in the coming years, then I think Arweave is a good deal right now, and I'm putting a trailing buy on this as well so I can add on to my current positions. And then the last one, can anybody guess what it is? It's pretty much the answer to every question like this that I ask. Contrarians. Why the fuck is Chainlink sitting at $11.50 right now? Why? If you believe in blockchain technology at all, understand that at the end of the day, all roads lead to Chainlink. I don't think I need to say anything else at this point. I'm putting a trailing buy on Chainlink as well. This is a lot for me, but I'm comfortable doing it at these levels. Now, to answer the question of newer positions, I would be more interested in newer positions if prices drop even further. And as always, if I buy anything, I will alert you to it, either here or on Twitter. The link to follow me on Twitter is always down below in the show notes. But I wanted to update everybody on what I'm doing and why I'm doing it, like I always do. That's pretty much all this podcast is just me doing that. And strangely enough, there are thousands of people out there who tune in and listen to me do this. I still don't believe it sometimes, but in a way I actually do because, if you've followed this podcast for long enough, you know that a lot of what we have invested in, even though we are investing for the distant future, has already paid us off pretty well. It's very often been a heads we win, tails we win more situation. So let's continue to be contrarians. Let's continue to buy things when nobody else wants to buy them and then get paid off in the process because we are not crazy. We are just early.